Navneet, good morning.
Good morning.
The day after, and we seem to be a little stable for now, but let's talk about some of the key takeaways for you from this budget. What was the one big theme?
So the backdrop was pretty tough. I mean, given the slowdown in growth, the tax revenues have been sluggish. The global environment has been challenging. It wasn't an easy place to put your budget. But I think it's well-intentioned. 2 or 3 things if I can pick up. One is, I think, a lot of focus on import substitution, though it hasn't got talked about as much after the budget, but there seems to be a lot of focus on import substitution. There seems to be a lot of focus on cooperative federalism. How do you build on the GST Council kind of framework to address a lot of other challenges that we have in the economy? How do you work more closely with the states? Also, I think a lot of focus on attracting foreign savings. So whatever we have done for sovereign wealth funds, for the dividend distribution tax, the biggest gainers would be the FPIs, the multinational companies who give a lot of dividend in India. I think all of them are going to be a very big beneficiary. So it seems that also the the withholding tax on corporate bonds, increasing the limit for corporate bond tax, corporate bonds, investment for FPIs, etc. My sense is that over a period of time, I think we need to work a lot more on increasing the domestic financial savings. I think that overall pool of financial savings is not enough to meet the investment needs of the country. After taking care of the central, state and the governments and the PSUs, very little risk capital is available for our investment needs. And that's why building our provident funds, our mutual funds, our insurance companies, I think that's very, very critical. So every policy framework must keep that larger objective in mind, and also the taxation. And that's why I think market was talking about the long-term capital gain tax or some of the other measures, because we need a lot much more domestic capital. Why do you have to resort so much for the foreign savings?
That was the big takeaway. Of course, a lot of our experts, were wooing the fact that there were incentives for the foreign funds, but not so much for back
But
home.
Navneet, that's a select few who will be paying taxes on higher taxes because dividend comes to them now. The normal investor, how many Indians do have a dividend income of 10 lakhs also? One. Second, the fact that companies will be able to pay out dividend, that from a stock market standpoint means that PE multiples will get re-rated and the yields will start increasing. So whereas the HNI crowd which came in our studio on Saturday and Sunday, they almost vented against it. But that is what amazes me.
No, also I think it's
These are 1,000 or 1,500 guys who will pay high taxes.
So overall, whether it's the flows into our provident fund, how do we build our NPS, how do we build our insurance companies, much bigger than where they are today. So I think whether it's the taxation policies or all other policies, I think must be geared towards, I think, giving a big fillip to our domestic savings. Financial savings, that's very critical.
Okay. Wanted to understand, on the subject that you were saying that more domestic savings need to be initiated. How are you viewing this particular move in the budget that insurance is not going to be tax saving anymore? It's been removed from ATC. Isn't that a hindrance in that sense?
So, there's always a counterbalance on one side when you say simplification of tax structure, which has also been a demand from most of the people. Then how do you simplify it without removing a lot of exemptions? But I think an overarching objective that there is a shortage of risk capital in India. We need to get a lot more financial savings than what we are getting today. And I think, so every single policy must be geared towards that.
Okay. For a retail investor, what's in it for the budget? How should he be looking at his positioning in the market now?
So of course, a lot of savings earlier used to be driven by the tax incentives. Now they have to look at meeting their investment goals, meeting their return expectations over a long period of time from their portfolios, and they have to build. For them, I guess it's business as usual. The event is behind us. In the very near term, market will start watching the corporate earnings season. Market will start watching what's happening globally. Market will start watching the execution of the budget moves, etc. Otherwise, for a long-term investors, I think it's business as usual, I would say.
How big is the ELSS flow for mutual funds? Because now next year ELSS technically should not exist as a proposition or as a category. How big is that for SBI?
I think so. ELSS is one of the larger category. In fact, a couple of years back, ELSS was our largest scheme. Over the years, because there are other investors who are not only looking at ELSS, but a larger allocation to mutual funds have moved to some of the other schemes. But there are few of the ELSS which are quite large in the industry. In fact, industry was expecting maybe a little bit of more increase in the ELSS limit so that there are more flows towards the mutual funds and also some of the other financial products.
So technically that ELSS unwinding will happen whenever the schemes mature, money not goes there. I mean, I'll be looking at...
No, incremental money may not come due to tax reasons, but otherwise I don't think there is any unwinding as such. It's any other equity product, but because you had to keep it for 3 years and take the tax incentive, people were putting the money for a longer term.
No, my whole purpose here is that, for example, if a scheme is started 3 years ago, ideally, if you are in that base, you would have shifted and the schemes would have continued to get inflows. Now, inflows may not happen.
People
Outflows,
don't do that. In fact, large number of ours is one of the oldest ELSS in India, 1993. I mean, we have lots of investors who've been there for more than 10 years.
Okay, so we should not worry about the ELSS impact.
Unwinding of that, incremental flows will surely get impacted, but not the unwinding of that.
Okay. How are you viewing the move of putting more money in the hands of consumers, not the top bracket of the taxpayers, but the ones below that? And does that really change the narrative of consumption themes, FMCG, consumer goods, etc.? Do that become more dearer for the market now?
So the jury is still out how many people will really opt for the new schemes because of the exemptions on account of the real estate interest, on account of other saving products and some of the other deductions. So we are yet to see whether a large number of people move towards lower rates without exemptions, and which means that a lot of money is going towards consumption. But another point I would make is that I think the consumption recovery may be led by the rural areas. You have a good sowing in this season. Rains were pretty good. Food prices have moved up. And with more sops from the union budget as well as efforts by the state governments, my sense is that the recovery may be led by the rural areas first, and then maybe a more broad-based consumption recovery later.
Do you feel that there's going to be, I mean, are you confident of the kind of return expectation going forward, given the kind of fall that we saw on Saturday? And, you know, we were talking about how we were just tracking the recovery in the mid-cap starting to come back, and whether the big question mark about whether that will actually sustain now going forward when we don't know what's really happening with growth. What's your sense?
So when we met last time, our view for the year was that we are going to see a more broad-based rally. We are going to see a larger participation of mid and small caps. That view hasn't undergone a change despite the fall that we have seen on Friday. We are going to see a shift towards cyclicals and value from the so-called quality stocks, which have done exceptionally well in last few years. That view also hasn't undergone much change, I would say.
But do you tactically make higher allocations to mid and small cap funds right now, or do you remain with balanced funds?
I think for long-term investors, there's always a better risk premium that you get in mid and small caps, particularly after the correction that we have seen in last 2 years. The valuations are relatively attractive.
So you do see this as a near-term correction, I mean, essentially.
So, I mean, I just mentioned that every time when a correction happens, the entry point is better for a new investor.
Yes.
Okay, where is China? Let's not lose sight of it. Chinese markets last time when we checked, and I think there should be lunch break now, as because Chinese, they do take a lunch break, unlike India. Yeah, they take a lunch break, very sensible. In this market, you need a break if you're in the Chinese stock markets. 8% down for Shanghai, approximately. And then, in case you're wondering that why it's not fallen more, it's lunch break there. Shenzhen is also, Shanghai Composite and Shenzhen 30, that's how you pronounce them. That's also down 8%. What's interesting here is iron ore prices have taken a hit of 8%, copper down 6%, rubber down 9%, cotton prices around 7%, palm oil is down 7%, aluminum is down 3.2%. Now these are global commodities, Navneet. Just when we thought that steel prices have started moving higher, base metal had, wholesale inflation had kicked in, you got to deal with an unfortunate global problem. What happens to growth assumptions? How serious is this? And will this now delay the cyclical recovery everywhere in the world?
There's a possibility if it blows out of proportion, there could be a risk to the global recovery. The assumption that we made when we met last time. My sense is that the other aspect of this is that the central banks will try to err on the side of caution. They're going to keep ample liquidity in the system, right from US Fed to ECB to PBOC and then most of the other central banks. We have already seen the bond yields falling across the world, and I think that can help a little bit going forward. Nobody really knows which way the coronavirus and its impact in the very near term. But I think if the previous episode of SARS is any guide, then maybe after a quarter or so, things should normalize.
Navneet, what does the MPC do given the kind of global backdrop as well as local backdrop that we're in when they meet on Thursday? Thursday is the outcome, yeah.
So I think the recent fall in commodity prices that Nikun just talked about, I think that will be a comfort for them. The fiscal deficit, I think it is more or less in line with the expectations. That would be a comfort for them. But at the same time, my sense is that the window of opportunity on the rates is very limited. What RBI will have to do more and more is target the term premiums and the credit spreads. Things like Operation Twist, I think that should continue to bring down the term premiums, and then do maybe more other measures to bring down the credit premiums, particularly on AA and below.
So you're saying they will not move on rates yet again?
Not much. There is definitely from a growth inflation dynamics perspective, the RBI needs to stay accommodative, but I think the window of opportunity on rates is limited. I think there is much more on other measures that RBI can do to target term premiums and credit spreads.
Sure.
Okay, I want to go back to something which is a bit of a letdown. Nothing came for real estate, and whatever has come for insurance is actually bad. Now, structurally, one is in a downturn, other is in an upturn. What happens to a derated real estate sector now that nothing's come from budget, and what happens to a re-rated insurance sector where we spoke to HDFC Life? I mean, she put a brave front. She barely managed to smile, but when you're in TV, you have to smile. That's what Vibha did on Saturday. She said, look, it's going to have an impact. I don't know how much. Everybody loves to own insurance stocks right now. And now that LIC issue is coming, is
That's
this
a big
a derating moment for insurance?
I think near term for sure. Again, I mean, the structural opportunity for insurance penetration in India is very high, but we have seen, I think, of most of the other industries that fiscal incentives are critical when you want a substantial growth in a particular industry, which has a larger repercussion on the long-term growth environment of the country. I expect that government would pay attention to it. Talking about the real estate, and I would assume that more measures will be taken post the budget. It's not that everything has to be announced in the budget. Before the budget, government announced the fund for to revive the stalled projects. I guess much more is needed to revive the real estate, because it's not only about reviving the real estate sector. Our view is that even for increasing the velocity of money, you need to revive the real estate sector. For job creation, for overall tax flows.
It has a big multiplier
effect. It has
effect.
a big multiplier effect. I think infrastructure and real estate are the sectors which have a very big multiplier.
So, Navneet, now let's look at the real world. The real world is global growth is still scary. Not scary, but it is still low. Corona is going to bring it down. India, nothing has come out in the budget that we will go from 4.5% to 6.5%. Cyclical recovery, if at all, will get delayed. 1 month, 2 months, 6 months, that's the debate which will start now. So then are we looking at more of 2019 where select 10, 15, 25, maybe 50 stocks, that's about it? Every time we think the universe will expand, something or the other happens.
So global environment can be looked at from two perspectives. One way, as you mentioned, that growth may take a hit. There is a hazy cloud on account of coronavirus. The other way to look at it is that there is going to be ample liquidity looking for investment destinations. Can India present itself for that investment destination? Can India present itself as that oasis of hope where large amount of money would like to come here, both in the form of FDI as well as FPI? I think that's where a lot of efforts have been made in the budget. I hope that in the form of execution over the next few months, we make it a reality. The other way to look at it, I keep thinking that, when we were growing at 10%, Nikunj, 10 years back, everybody predicted India is likely to grow at 10% forever till eternity. Today, it seems that we are coming to terms with, because we are at 5%, we believe that 5 and 6 is the new normal. I think our potential is much larger. We need to be a lot more bold and creative. As a society, I think all of us need to work harder and again get that, I would say, that boldness in us, that I think our potential is a much greater. And as again, market went into the budget with a lot of expectations, as if that's like the tryst with destiny movement and everything will be announced for next 10 years on that day. But we have seen efforts, a lot of measures were taken before the budget. And I have strong reasons to believe that, and I have a lot of hopes that over the next few months, we are going to see a lot of other actions that makes that hope into a reality.
Okay, so thumbs up, thumbs down
Yeah,
on
and I was going to
neutral
ask
budget.
as well. I was pushing for a rating actually. Number out of
Let
10.
the actions speak. They speak louder than words.
Exactly. So I think the 3 words most critical going forward are execution, execution, execution.
So neutral?
And what the other thing we need to do is to get a lot more certainty on policies. Think about from an investor's perspective. Somebody bought a house last year thinking about a tax incentive for next several years, and suddenly it changes. Same thing on some of the other policies. I think what we need to do, because we've done so many big structural reforms, GST, RERA, IBC, I mean, whatever we have done on digitalization, etc. I think it's time to build on them, give a little bit of more policy certainty for next few years, and just focus on the execution.
Okay, Navneet, great to have you in the studios. We'll let you go on that note. You dodged my question on the actions, but we read into your words.
Thank you.